We've got mind-blowing statistics on the housing market collapse that we're going to get into right now. But first of all, you have to hear the Business Council CEO pitching the Century Initiative to a group full of real estate investors. So take a listen to this.
By taking reasonable steps today, such as allowing increased immigration, we can put Canada back on the right path.
Wait for it.
Now, of course, an additional 60 million people will need places to live.
And that is it right there. That is what they wanted all along. But now you've got a complete disaster. The housing market in Canada looks so fragile, and so does the banking system that relies directly on it. We'll get into the data that just came out from the Bank of Canada that shows how this credit bubble is imploding with the loan data. But first of all, let's get into this article from the Star. So we just had the worst February on record for new home sales in the Greater Toronto Area. Saw nearly 17,000 new and pre-construction condo units languish on the market without buyers. And of course here they're blaming it directly on the tariffs, and the economic slowdown we know on this channel was happening way before the tariffs. I mean, even the Bank of Canada was cutting before the tariffs. So to pin everything on the tariffs is so stupid and is just taking people as a fool. But anyway, it's interesting nevertheless. So the benchmark price for a new condo apartment in the Toronto area sat at just over $1 million in February, the report says, though that benchmark price has come down over 2.4% in the last year. A 20% down payment on a new home at the benchmark price would still require a household to put more than $200,000 towards it as a down payment. So again, nobody can afford that in this economy. And get this is the real kicker here. So while 16,955 new and pre-construction condos sat unsold in February, just 152 found buyers. I mean, that is just unbelievable when you really think about it. I mean, out of 16,955 units, just 152 found buyers. I mean, that is just the market completely freezing. And these are new pre-construction condos. So you can imagine the developers, they've had to leverage up like crazy to build these condos exactly like they did in China. So they're now in trouble because you've also got immigration that is backpedaling. I mean, take a look at this as well. So Canada saw a 46% drop in study permits applications in January. And yeah, we're talking about study permits, so that's mainly for the rental market. But think about who these investors would be buying the condos for. It's these students. So, you know, the fact that they're not coming and the applications are coming down so much, but the amount of new inventory coming on, it creates a really terrible self-reinforcing cycle that you're going to see. And it's not just Toronto. It's happening in Calgary. It's happening in Vancouver. It's happening all over the country. And it's going to have wide-reaching consequences and a lot of unintended consequences, the study permits dropping this much. So international students' application fall but remain lofty. The trend extends a decline that began last year. There were 580,000 new applications in all of 2024, down 33% from 2023. It's still a massive amount of applications, but it also happens to be the lowest since 2021. Even though the volume has remained high, it's falling much faster than most anticipated. So think about how quickly this is declining, and think about all the rental inventory that was built up on the back of this and all the loans and everything else. There is so many unintended consequences that people aren't thinking about, which will happen because of this real estate bubble, because of this credit bubble, and also because of the population bubble that is now imploding. It's very important. And you take a look at power of sales. This comes from John Flynn, and you can see power of sales, according to the Toronto Real Estate Board, they just keep going up and up and up. And this trend obviously is just going to continue here. Unfortunately, you're just going to see more and more people losing jobs and unfortunately losing their homes.
Can you We're We are so I'm terrified. because not only am I not working, but neither is my husband. And we have to renew our mortgage. And I have to renew that mortgage before they find out that I am not working.
And then if you take a look at a recent survey that came from H&R Block, thanks Terry for this. So obviously the trade war is impacting financial markets as they take a beating. But a new survey by H&R Block says that the stress is directly impacting how people feel about their finances. And again, that's all the uncertainty that comes with it, but also the high amount of people that are being laid off. There's a lot of people whose job are at risk because of this, and it's on both sides of the border, so you have to acknowledge that. But if you take a listen to this, it shows what a dire state people's finances are in. So nearly 48% of Canadians rely on their credit card to make larger purchases versus tapping their savings, and 17% instead rely on installment payment options, including buy now, pay later. Think about how those type of things boomed during the Great Depression. I mean, buy now, pay later was incredibly popular during the lead up to the Great Depression in the roaring 20s. And you've now got that 17%. I mean, that is really a shockingly high number when you think about it. And then it says more than half of Canadians, 56%, worry that they'll have to go into debt or use a credit card if an unexpected expense comes up rather than rely on their savings. For example, to replace an appliance, home repair costs, dental costs, etc. And we've seen property taxes that are just going up and up in most cities. So you're seeing the cost of ownership of a home that is going up, and people aren't able to raise the rent. So renters are getting some relief in terms of lower rent prices, but by no means can the landlords actually afford to give them. So rubber is going to meet the road there at some point. And now I want to take you over to this because this shows the credit crunch. And you can imagine that this credit crunch will be blamed entirely on Trump. It will be blamed entirely on the tariffs, but it's really not that has caused this. It is the credit bubble that has been built on the back of the housing market, and it's also the population bubble that has really helped influence that into an outright mania over the past 4 or 5 years. So this chart is really hard to see, so what I did is I put it on this screen here. Unfortunately, the Bank of Canada's charts aren't the best, but basically I know it's really small here, but you can see how this has actually started to go down here. Now there are different times where this has gone down before, but it's interesting how it's coinciding with other data points, and that's what I want to outline to you. If you look what happened to credit in 2020 in loans, obviously it was a sharp drop off there, and even though it sharply rebounded, if you think about what happened during this time in 2020, the housing market wasn't doing very well in 2020. It was only in late 2020 when it actually started to pick up, and that was because of the mortgage deferrals and all the government stimulus that was starting to have an effect on the economy in terms of distorting it. And I know I keep going on about the business barometer data here, but it's so important here because when it's crashing to a low that is far lower than you saw in 2020, and this is telling you what businesses are thinking in terms of whether businesses are optimistic or pessimistic. And right now, they are more pessimistic than they were during 2020, more pessimistic than they were during 2008. And think about it, 2020, the whole economy was shut down in March of 2020. But they're more pessimistic now than then. And that's because of all the economic distortions that have happened. It's not just because of the tariffs. We've been kicking the can and kicking the can and kicking the can, relying on money printing and inflating asset prices to get by over the past 4 or 5 years. And eventually, your economy is going to see rubber that meets the road, and you're going to have to actually experience that downturn. You can't keep putting it off. And we've already seen that the average person has just been absolutely destroyed over the past 4 to 5 years by inflation. I mean, I know I always bring this up, but if you go to shadow stats, this shows inflation as it really is, the reality. And when you look at the reality, even now it's at around 12-13%, and they're cutting rates. And obviously this is the US CPI, but it's incredibly similar to the phony Canadian CPI as well. And obviously the CPI-U is actually the US CPI as it stands now. So you can see how they follow each other. So this is a good indicator of trend. But in terms of actual inflation, it's a terrible indicator. And obviously with the tariffs, it's going to be incredibly interesting to see how this all plays out. But it really doesn't look good for the economy. So anyway, guys, if you've enjoyed this video, I'd highly recommend that you check out this video here. And then if you're looking for a VPN and also want to help support the channel, please go to expressvpn.com/marketmania. I will see you in the next one. Take care.